out of 100% of traders, only 30% are profitable. So I had one job to find out what the 30% of traders are doing that the 70% are not. And unexpectedly, I discovered something surprising. Now, this is the difference between seeing red screens on your charts and seeing constantly blues. Now, I'll call this the 6 profitable S's. Now, let me explain. Have you been able to look through the chart and found out big, huge candlestick popping out of nowhere? Like, take a look at this one. Now, the question becomes, why is that candlestick right there bigger than all of the candlestick right on the charts? Now, I mean, take a look at this. Now, one of the most common reasons that this happened is because of the news in the market. News in the market can vary due to different things, like the political state of a country, the economical state of a country, anything at all that can affect the currency of a country. Now, you might be asking, how can I know the news in the market? Did I subscribe to CNN, Fox News, CNBC, Bloomberg, and every news broadcasting platform all at once? But now, practically, that's impossible. What's not practically impossible is subscribing to this channel. Yes. So go ahead and smash that red subscribe button. Now, all jokes aside, for you to get the upcoming news in the Forex market, just head over to Google and type in Forex Factory. Now, you'll see a whole lot of options, but get into the one that says forexfactory.com. Now, this is where you see the current news in the market and the upcoming news in the market. Now, if this looks strange to you, don't worry, I got you. Now, if you look at this bar right here, it shows you the date, and it also shows you the day, and it also shows you the time. And this you're seeing right here are the currencies, and these long words you're seeing right here is what's causing the news. You can see the ISM services PMI is what's causing the high impact news in the US dollar. Now, in case you don't know, these file packages you're seeing right here are the different types of news. Now, the red files represent the high impact news, the yellow suitcase represents low impact news, and then the orange case represents middle impact news. So before you ever start trading the market for the day, you should go ahead and check the news first. Now, this is one of the S's among the 6 profitable S's, which is start checking the news. So let's get into the next one. Now, in case you don't know, it's not every currency you're meant to be trading. Here's what I mean. Now, there are 4 different sessions in the market, which is the New York session, the London session, the Sydney session, and the Tokyo session. Now, each of these sessions actually have a currency that they are paired with. Now, I want you guys to look at the name of these sessions individually. Now, if you can look at them, they are actually states or cities of a particular country. Now, for example, New York is actually a state in the US. Now, the currency that the United States use is the dollars or the United States dollars, and in this case, the New York session is actually representing the United States dollars. Now, London is a place in the UK, and United Kingdom actually uses British pounds. So whenever you see the London session, it's trying to represent the British pounds. And also, Tokyo is a place in Japan, and the Japanese actually uses the yen, or as we can call it, the Japanese yen. Now, Sydney is actually a place in Australia, and the Australians actually use the dollars, or we can specifically say the Australian dollars. Now, I don't know where you're watching this from, but different sessions in the market actually have different times. Now, when I'll be having New York session is not the same time you'll be having New York session, or when I'll be having Sydney session will not be the same time you're having Sydney session. So it's something that can actually be considered a lot. Now, I'm gonna give the UK time of when these different sessions actually occur. Now, the London session actually begins by 8 a.m. and ends by 5 p.m. The New York session begins by 2 p.m. and ends by 10 p.m. The Sydney session begins by 12 a.m. and ends by 6 a.m. and the Tokyo session begins by 11 p.m. and ends by 8 a.m. Now, amongst all these sessions, the best session to trade is the New York and the London session. Now, luckily for me, London session actually begins by 8 a.m. and ends by 5 p.m. This means that throughout the daytime, I already have London session going out and in such a good part of the market. Now, this means throughout the daytime, I actually have a very perfect condition to trade. To pair that up, New York sessions begins by 2 p.m. and ends by 10 p.m. which literally adds to everything. Now, there are some people that actually have the London and the New York session during the night time and the Tokyo and the Sydney session during their daytime. Now, this means that the best time of the market will actually be happening during their sleep. Now, for someone that is actually having the London session within the night time, it will not be the best thing for you to go ahead and put GBP pairs within the active pairs you'll be trading, because most of the time of that currency movement to actually be during your sleep. Now, the best pairs that you can actually trade within the Sydney and the Tokyo session is the Australian dollar and the New Zealand dollar. So these pairs actually have the most movement within that point in the market. Now that's actually the second S, which is knowing the sessions and currencies you trade. Now if you go ahead and scroll through TradingView and MetaTrader 4, you actually find out that there are a lot of currencies out there. Now in case you don't know, there are actually three types of currency pair, which is the major currencies, the minor currencies, and the exotic currency. Now the major currencies are those currencies that are paired within the US dollar, the euro, the British pounds, the Japanese yen, and the Australian dollar. Now whenever you see these currencies that are paired like GBP USD, AUD USD, Euro GBP, and lots more, this is actually the type of pairs you should be trading, because these pairs are actually the most profitable ones out of all of them. But now the pair with the best movement is actually the British pounds and the US dollar, or I'll say GBP USD, because GBP is actually the highest currency out of every currency in the world. The British pounds, US dollar is actually of a very good economy. Now just like I said, for those people that are actually having London session within the 9th time, it should not actually be a smart move for you to go and trade GBP USD, but you should look for pairs that actually move within the Sydney and the Tokyo session. Now secondly, there's what we call the exotic pairs. Now the exotic pairs are the major currencies paired with the South African rand, the Russian rubles, I hope I'm pronouncing it well, and the Hong Kong dollar. Around these three currencies are actually the exotic pairs. Now these currencies actually have somewhat of a good movement, but this can never be compared to the major currency pairs when they are actually combined. Now thirdly, there's the minor currency pairs. Now minor currency pairs are those pairs that are not mentioned here. Any pair that I didn't mention here, they are minor currency pairs, no matter the currency you pair them with. So I'm not going to go ahead and mention any currency pair, but minor currency pairs are the worst pairs you can ever trade, being that they can actually have the highest spreads that you can ever see on a broker platform. Now as you can see, this one is about to cover the entire section of the MT4 quote section, and when I say these currencies have the worst movement you can see, I want you guys to keep this side by side with GBP USD. This is GBP USD right now, and look at this currency pair. Now I wouldn't encourage trading minor currency pairs because of the disadvantage that it actually comes with. So it's best that you actually pick any major currency pair that suits your session and go ahead. And now that's the third S, which is to stop trading low currency. Now if you go ahead and you want to place a trade, you actually see the section that says market execution. Now if you tap into the market execution, you see bunch of different orders in the market. So buy limit represent that you want the market to go down first before it goes up, so you place in a buy limit. Sell limit is just like you want the market to go up a little bit before you expect it to start going downward. Buy stop is when you expect the market to reach a sign high before you enter into a buy, and sell stop is when you expect the market to go down to a certain point till you take a sell. And that's actually the fourth S, which is set your orders. Now there's a difference between closing a trade immediately and knowing the right time to actually close a trade. Now the right time to actually close a trade is when price start going opposite to where you expected it to go to. Now there's a difference between, you know, allowing the market to do its thing, like the market to do its thing before it goes in the right direction, and there is a difference between price going in the abnormal direction. Now some people, out of lack of confidence, they can actually go out and close these trades by themselves, and when they actually come back to the market, they find out that price actually went their direction. Now the best way for you to actually avoid things like this is for you to mark a point and to know that whenever price passes this point, whenever price goes above or below this point, that means price is no longer going in my direction. And now the next thing you have to do is that you have to put a stop loss right there, so if price tries to get to that point where you're not with your phone, the brokers will actually go ahead and close it out for you. And that's actually the fifth S, which is start cutting losses. Now let's imagine there are two investors and you want to invest $1 in one of these investors, and let's say the investor A says he can get you $100 out of your $1 in a year period, and the investor B promises to give you $1 million out of your $1 investment. Now I want to ask you personally, which investor are you going to invest with? Now one thing you really need to do is to be realistic in this market. Now this is where you really need to mind the lot size you use in the market, because you can't use any lot size in any account size. Now this all boils down to risk management, and right here I've already shown an app that will give you the right lot size to use depending on the percentage you're willing to risk in the market. So with that being said, make sure you hit the red subscribe button if you're not yet part of the family, and make sure you hit that like button. And with that being said, I'll see you guys in the next one.